My guest market monitor this week is Nancy Tengler, President and Chief Investment Officer of Fremont Investment Advisors based in San Francisco. And welcome to Nightly Business Report, Nancy.
Thank you, Paul.
I understand you have some $6.5 billion under management. Is that true?
That's right.
Well, now, since this is your first visit with us, give us an idea of how your middle-of-the-road or moderately aggressive accounts have done so far this year.
Well, unfortunately, they're down for the year about 10.5%, but clearly well ahead of the benchmarks.
Well, that's good because the S&P is off over 20%. And these days, financial reporters ask money managers, how little are you off, not how much are you up? So that's just the kind of a market it's been, I'm sure you'll agree.
Right.
Well, Wall Street today, with a nice rally, seem to be saying the U.S. economy is making a comeback. Do you think this recovery is real or imagined?
We've been pretty confident that the economy was chugging along nice and steady, not dramatic improvement, but every month we've seen incremental improvement, particularly in manufacturing and in some of the technology sectors.
What do you think is the major obstacle to a new, thriving bull market?
Well, I think that there's just ongoing concern about Iraq, about potential terrorism. I think we're past the accounting scandals, but really investors are looking for visibility. Great second quarter earnings. About two-thirds of the companies beat their numbers, but they didn't provide investors with any visibility.
Mm-hmm. Well, do you think the market's going to be stuck in a rather narrow range for a while, or that will be considerably higher by year's end?
Well, I think we're going to trade in this range through September, pre-warning season for third quarter earnings. And then I think the fourth quarter will start to sort itself out, and we'll end up about 10 to 15% above current levels.
Right. Well, because interest rates are probably about as low as they're going to go, they have helped cushion the stock market slide, but isn't about the only bullish driving force remaining for stocks a solid rise in corporate earnings?
That's it, Paul. You're right on. And I think the way we get there is not through dramatic top line initially, but through the continued benefits of productivity improvements. You saw Intel's margin news yesterday. Expanding margins in this kind of environment is remarkable.
So you're looking for a good improvement near the end of the year?
That's right.
What kind of stocks would you buy now, if any?
Well, I brought 5 stocks for the next 5 years. These are stocks that we think will double in the next 5 years. And I start with Cisco, which is trading at 19 times next year's earnings, 18% growth, $2 a share on the balance sheet in cash, and a great management team that is gaining share in this difficult environment.
Okay, so Cisco is one of them.
Cisco's one. The next one's Wyeth, a pharmaceutical company that's had some problems with one of their primary drugs. This is a company that only has 3% exposure in their drug sales to generics, lowest in the industry, attractive valuation about 14 times next year's earnings.
Okay, that's WYE on the big board, as I recall.
That's right, Paul.
All right, let's have number 3.
Number 3 is General Electric. Never been cheap enough for a value investor like myself. High yield, about 2.5%. The long cycle business is suffering. That's power systems and aircraft engines. But the short cycle's improving, and there's no improvement modeled into this year's earnings.
Okay, let's go to number 4.
Number 4 is Disney. A little risky, but I think has the potential to improve from here. A little higher multiple, about 20 times, but that's on depressed earnings. We think this stock could go to 30 based on improving theme parks and ad markets.
All right, and last but not least, number 5.
Hewlett-Packard. Hewlett-Packard's trading at 11 times next year's earnings. It's an industry leader. This is in each of their businesses, and this is a company that can fix a lot of the cost structure problems from the merged companies and can generate, strong low double-digit earnings growth going forward.
Nancy, do you personally own any of the stocks you just recommended, or does your organization own them?
Yes, the funds we run own all of those stocks, and personally, I own a little bit of Cisco, a little bit of Wyeth, and a little bit of Hewlett-Packard. Okay.
So just as a wild guess, what do you think the Dow will be toward the end of the year? Let's say.
Oh, my goodness.
Just a wild guess.
Well, I'm going to start by disagreeing with Bill Gross. I don't think it's going to be at 5,000.
Okay.
But I do think you could see...
All right. I won't press you on that. It's a tough call, I know. Nancy, thanks very much for being with us.
You're welcome, Paul. Thank you for having me.
We've been speaking with Nancy Tengler, President and Chief Investment Officer of Fremont Investment Advisors.